Okay. By the way, can you guys put the mic in mute? Thank you.
Can, sir.
Okay, sir.
Okay, thank you. Good morning, class.
Good morning, sir.
Good morning, sir.
Okay, I can see your face. Just wake up from your sleep. So before we start class, I want to ask you, how are you guys doing?
I'm
I'm
fine,
fine,
sir.
sir.
Sir, I'm little bit dizzy, sir.
Huh? Dizzy? Oh, already 2 days holiday? You come a little dizzy, eh? Have you meet the doctor, Nazren?
Not yet, sir. But I will meet the doctor after this class.
So can you still follow up the class?
Can, sir. I still can catch up.
Okay. So Nazren, get back soon. So today we will continue to chapter 4, which is about non-bank financial institution that we call NBFI. Have you all read the slide given?
Done, sir.
Done, sir. I have read it.
Done, sir. I have read.
Alright, nice. So let me share the screen. So can you guys see the slide?
Can, sir.
Can, sir.
Okay. In this chapter 4, non-bank financial institution that we call as short form NBFI. So in this chapter, we got 5 subtopic: development financial institution, insurance companies, saving institution, provident and pension fund, and other non-bank financial institution. For you guys, you only cover tabung haji, pemodalan nasional berhad, and unit trust. Can you see the slide? Financial institution.
Can, sir.
Alright, nice.
Can, sir.
So let's continue to financial institution. A financial institution that we call FI is a company engaged in the business of dealing with financial and monetary transactions such as deposit, loan, investment, and currency exchange. There are two types of financial institution. It is bank and non-bank institutions. The bank is like commercial bank and Islamic bank such as Maybank, CNB, or M-Bank, while the non-bank institutions such as insurance companies, saving institutions, and pension fund. For example, worker or household or surplus unit will make saving in the financial institution. You can look at the graph. Then the financial institution either with bank or non-bank and will get dividend according to the percentage set by the institution within the stipulated time. The financial institution also allows any business, companies, or deficit units to make a loan as a capital to their business, and the financial institutions will generate income. So, from the loan interest, and the company will make a repayment to the institution according to the set rate, and the company will be charged interest for the repayment according to the loan amount. Did everyone get it about my explanation just?
I understand, sir.
You guys, another guys?
Understand, sir.
I understand, sir.
Okay. You guys said you guys understand. So can anyone state the example of bank and non-bank? Anyone?
I can, sir.
Okay, Syed. Go.
I will state the example of banks and non-banks. The banks consist of commercial banks and Islamic banks, while the non-banks consist of development financial institutions, insurance companies, saving institutions, and pension funds.
Okay, Syed. Good. So I can see that you focus in my class. Yeah.
Thank you, sir.
So we move on to development financial institution. So a development financial institution that we call DFI, also known as a development bank or development financial company that we call DFC, is a financial institution that provides risk capital for economic development project on non-commercial basis. They are often established and owned by governments or charitable institutions to provide funds for projects that will otherwise not be able to get funds from commercial lenders. Uh, you guys can hear me?
Can sir? I can hear you.
Can, sir.
Can, sir.
Okay, let's continue. Some development banks include socially some development banks include socially responsible investing and impact investing criteria into their mandates. Governments often use development bank to form part of their development aid or economic development initiative. DFIs can include multilateral development banks, national development bank, bilateral development banks, microfinancial institutions, community development financial institution, and revolving loan funds. So, this institution provide a crucial role in providing credit in the form of higher risk loans, equity positions, equity positions, and risk guarantee instrument to provide sector investment in developing countries. So, DF, DFI are typically backed by countries with development economies. Did everyone get it?
Of course, sir.
Get it, sir.
Can sir?
Wait. Someone chat me. So wait I need to answer the phone first.
All right, sir.
Hello guys. Sorry because I have an emergency. So I think we need to end this session early today. So before we end our class, I want to make sure that you guys understand what I said earlier. So you can see that our slide have in 9 slide. So I hope you can discuss with you guys because I have an emergency. So we continue a little bit. So I need a volunteer to briefly explain the definition about DFI. Can anyone?
Me, sir.
Okay, Nazmi. Proceed.
A development finance institution, DFI, also known as a development bank or development finance company, DFC, is a financial institution that provides risk capital for economic development projects on non-commercial basis.
All right, good, Nazmi. I don't know either you understood or you read the slide, so never mind. With Nazmi explanation earlier, then our class end this morning. I'm so sorry because I have an emergency. So before the next class, I want, like I said earlier, you have to make a group decision on the next subtopic because our slide has in 9 slides. So I need you guys to cover it by yourself, such as namely insurance company, saving institution, and provide provident and pension funds as prepared. So thank you everyone. Have a nice day. I'm really sorry. I hope you guys can understand my situation. So see you guys later.
It's okay, sir. Thank you, sir.
Thank you, sir. Have a nice day too.
Thank you, sir. Have a nice day too.
So Nazren and Nazmi, do you have free time tomorrow afternoon?
Yes, I have free time tomorrow afternoon. What about you, Nazrin?
Yes, me too. Why, Syed?
I think I want to have a discussion like Sir Hafiz said earlier. Do you both agree?
Of course.
Of course, Syed. Of course.
All right, then I want Nazrin to read about saving institution, while Nazmi need to read about provident and pension funds, and I will read about insurance companies. Then we need to explain each of these topics in preparation for the next class. It is okay?
That's it very nice, Syed.
All right. See you both at 3 p.m. tomorrow. Bye. Hi Nazmi and Nazrin.
Hi, Syed.
Hi, Syed.
How was your day? Is it okay?
Okay,
Okay. Everything just fine.
but I'm hungry.
I just passed the account test that I repeat for this sem. Very stressed out.
Do not be
For you,
stressed
Syed.
out. I know you can, Syed.
Thank you,
Yeah,
Nazmi. You are very supportive. I like your vibes.
I like your vibes.
Okay, let's continue to what our planning for do this afternoon. We are
Okay.
going to discuss about the subtopic given yesterday, and I'm going to explain about insurance company. So, Nazmi and Nazrin, have you read the subtopic that I give yesterday?
Yes. I already read the subtopic.
I have already read it.
Nice, Nazrin and Nazmi. So I am going to proceed to explain about my subtopics, which is insurance company. Insurance company. Insurance is a means of protection from financial loss. It is a form of risk management primarily used to hedge against the risk of a contingent or uncertain loss. An entity which provides insurance is known as an insurer, insurance company, insurance carrier, or underwriter. A financial institution which underwrites the risk of loss or damage to personal and business assets and life and limb. Some companies specialize in one or other of these areas, but other operates in both sectors. Insurance companies issues insurance policies to cover a variety of contingencies such as fire, flooding, breakage, theft, and death involving potential financial loss to policyholders on their dependents in return for regular payments of a premium. An insurance company operates by pooling risks among a large number of premiums. Policyholders are based on the probability of a particular event occurring and the average financial loss associated with each. This is done by the company's actuarial staff using statistical techniques to analyze past claims. For a very large insurance risk, an insurance company may resort to reinsurance, sharing the insurance premium with other insurers in proportion to the share of potential claim which they are prepared to accept. In addition, many insurance companies offer contractual saving schemes. That's all for me. Nazren, you can continue with your subtopics.
Okay, thank you, Syed. Okay, for my explanation, um, I'm just summarize that I have studied the subtopic. Saving institution. Okay, saving institution is promote and mobilize savings of the middle and lower income groups, especially those from the rural areas. Okay, these saving institutions depend mostly on the network of branches and other office as well as large potential customer base to collect huge amount of saving. Okay, it pools small individual savings in the form of subs to provide convenient and easily accessible medium to small savers. Okay, example example of bank institution is um, okay, the first one is Bank Rakyat. We got Bank Rakyat in Malaysia, BSN, and Co-op Bank Persatuan. Okay, I think that's all from me for saving institution. Okay, I think Nazmi, you can tell what you have studied about your subtopic.
Okay, thank you, Nazren. I will explain my subtopic. This subtopic a little bit long, but I hope that you guys can hear about my explanation. My
Yes,
subtopic,
of course, Nazmi.
nice, Syed. My subtopic is about provident fund and a pension fund. A pension fund, also known as a nation fund in some countries, is any plan, fund, or scheme that provides retirement income. Pension funds are pooled monetary contributions from pension plans set up by employers, unions, or other organizations to provide for their employees or members retirement benefits. Pension funds are the largest investment blocks in most countries and dominate the stock market where they invest. Provident fund is another name for pension fund. Its purpose is to provide employees with lump sum payments at the time of exit from their place of employment. This differs from pension funds, which have elements of both lump sum as well as monthly pension payment. As far as difference between provident funds are concerned, although both types involve lump sum payment at the end of employment. The former operate as a defined benefit plan, while the latter is a defined contribution plan. If you guys want to know, there is difference between pension fund and provident fund. Did you guys want to know about the difference?
Sure, Nazmi.
Yes. I'm very interested
I'm very
to know.
interesting to know the differences.
Nice one. Okay, now I will explain the difference. Provident fund is a fund in which employer and employee makes contribution while an employee is in employment with the organization is known as provident fund. While a fund of pension created by the employer in which contributes an amount for providing retirement benefits to the employee is known as pension fund. Secondly, provident fund eligible to make contribution with both employer and employee. But unlike pension fund, it eligible with the government and employee. Furthermore, provident fund nature of amount received is lump sum, but pension fund nature of amount received is different. It's either in lump sum or in the form of regular income. Depends on the pension opted by the member. Other than that, basic amount of provident fund by the contribution made by both the parties plus interest, while the pension fund amount will be based on an average of last 12 months salary and year of service. Additionally, provident fund can withdraw by a person. Can the retirement entire amount of provident fund, but pension fund only 1/3 amount can be withdrawn. Aside from that, benefit of provident fund is which money fund may only his or her get his or her part of contribution, but provident belongs to them, both party contribution. Last but not least, the tax deductible of provident fund is minimum of 6,000 ringgit per year, while pension fund is 7.5% of the member's salary are tax deductible. That's all from me.
Nice one, Nazmi and Nazren. Thank you for the explanation.
Hey,
So
guys,
we
guys,
move-
guys.
So
Before I
we move.
Guys,
So-
guys,
Oh.
guys. Before I forgot,
You may proceed.
Oh, okay.
before I forgot, did you want to know that in Malaysia, we have our many types of provident and pension fund? For provident fund, we have EPF, SOSO, and Teachers Provident Fund. While for pension fund, we have KWSP, Catalytic Development Fund, and AIA Pension Fund. Okay, that's all for me.
Wow, that's a new knowledge. Thank you, Nazmi, for your explanation.
Thank you, Nazmi.
Sorry
for
to
your
interrupt.
Okay,
I'm
thank
sorry
you,
to
guys.
Nazmi.
So we move on to other non-bank financial institutions. Can we proceed?
Okay, you may proceed, Syed.
For tabung haji, Lembaga Tabung Haji is the Malaysian Hajj Pilgrims Fund Board. It was formerly known as Lembaga Urusan dan Tabung Haji. The main headquarters is located at Jalan Tun Razak, Kuala Lumpur. Tabung Haji facilitates savings for the pilgrimage to Mecca through investment in Sharia-compliant vehicles. What about you, Nazren?
I have studied other non-bank financial institution. The one of I study is PNB. What we call it, Permodalan Nasional Berhad. Okay, this one is PNB is established to promote the ownership of share capital by Bumiputra community in the Malaysia corporate sector. PNB is one of the largest fund management companies in Malaysia. Okay, PNB's portfolio covers strategic investment in Malaysia, leading corporates, global equities, private investment, and real estate. Okay, what about you, Nazmi?
Thank you, Nazren. I have studied about unit trust fund. Did you know a unit trust fund is a form of collective investment constituted under a trust deed? A unit trust pools investor money into a single fund, which is managed by a fund manager. Unit trust offer access to a wide range of investment, and depending on the trust, it may invest in securities such as shares, bonds, gilts, and also properties. Those investing in the trust own unit, whose price is called the net asset value, NAV. The number of this unit is not fixed, and when more is invested in a unit trust by investor, opening account or adding to their account, more units are created. That's all from me.
Okay, thank you,
Okay.
Nazmi and Nazrin. So to make sure we understand about what we are discussing, I think we should do a questionnaire to each other, so we can know either we understand or not about our discussion. So
That's a good idea,
I'm going
Syed.
to ask Nazmi.
Yes, Syed.
Can you briefly explain about insurance company?
Insurance company is a financial institution, provides a range of insurance policies to protect individuals and business against the risk of financial loss in return for regular payments of premiums. An insurance company operates by pooling risk amongst a large number of policy holders. Okay, now I'm gonna ask you, Nazren, about a question about provident and pension fund.
Okay, you may proceed, Nazmi.
Okay, Nazren, what is the definition of provident and pension fund?
Oh. Okay, Provident Fund is another name of pension fund. Okay. Its purpose is to provide employees with lump sum payments at the time of exit from their place of employment. This differs from pension fund, which have elements of both lump sum as well as monthly pension payment. Pension fund is a pension fund, also known as a superannuation fund in some countries, in any plans fund or scheme that provide retirement income. Pension fund pool monetary contribution from pension plans set up by employees unions or other organizations to provide for their employees or member retirement benefits. Okay. Syed, can you give me one example bank institution?
One bank example for bank institution. Okay. BSN,
That's
right?
Okay. That's correct, Syed. Cause my question is very simple.
Thank you, Nazrin.
Okay, Syed. So I think we need to end this discussion right now, cause I got a lot of work to do. I need to help my mom right now. Can we dismiss right now?
Yes, because I want to go to the grocery.
Oh, you want to go to grocery? Okay.
Yes.
Okay, see you tomorrow at the class.
Okay. Okay, Syed. Okay,
Thank
Nazmi.
you.
Okay, see you guys tomorrow.
Thank you, guys. Bye.
Bye.
Bye bye.